Well, hello again, Maverick Traders. It's Joe with you here. It's July 30th. It is Tuesday. I am back from vacation and found myself in a pretty cool situation with an FOMC statement coming in tomorrow. We'll talk about it. You guys know how this works. Take responsibility for what you get from this course. I'm going to move into the meaningful news of the day, if there was any. We'll break these markets down technically and, as always, share trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, you'll see that we had kind of the same thing we've been seeing for the last couple of weeks, almost a month now, of the great rotation, to coin Rob's phrase. Hopefully everybody else starts using it. Let's jump into the daily news here. The S&P slips below the 50-day moving average. We did see a surge into the close to the upside, but don't let that fool you, folks. This was primarily a sell day, especially in the Qs. The great rotation continues at a steady pace, and I want to really say steady. The volume is high, but it's not a catastrophic panic. We did see a pop in the volatility index. I've actually got another slide here we're going to discuss. However, by no means is this the collapse or a bearish thing. This is just a strong round of rotation. What I noticed too, Microsoft trading lower after hours. It beat its earnings, beat its estimates, came in, everything was great. However, its projections on its AI were lighter than expected. And this stock was down 6% when I saw it. It's about down 5.5% right now. So how do we finish overall? The Dow, the S&P, and the Qs, well, guess what? The Dow's up 0.5%. The S&P is down 0.5%. Once again, it was just about to close below that 50, but it's looking super bearish, and it closed pretty much right at it. The Qs, the biggest loser today, down another 1.25%. Russell's kind of sideways, up 0.38%. Oil, a little bit of a slide, but not nearly as what we've seen as of recent, just down 0.79 in gold with a bounce of 1.29. Let's take a look at the advanced decline line. You can see that 50% of stocks were advancing, 46% were declining. Now that's kind of interesting considering that 2 out of the 3 major markets were negative. The Qs over 1.25%. Just shows you the impact that some of these larger companies have. The majority of the upside was definitely in the Dow 30, and some of those defensive plays. Above below the 50-day moving average, we have snuck above the 50-50 line. We're at 61%, 39% below. So overall, folks, you need to understand that these markets, although aggressively correcting in some sectors, specifically in the Qs and stuff like that, 61% are still above the 50-day moving average. So it still remains glass half full as far as above below the 50-day moving average. All right, let's just jump straight into it. So here's the SPY. And like I say, I just got back from vacation, so it's always interesting to come and take a look at this with a fresh set of eyes, if you will. Now, when I look at this correction that we got going on in the S&P, it's a little deeper, and it goes pretty quick. We did have that gap last week, but we did get a little subsequent bounce. Now, the big thing is, all right, is this falling apart? Not really. And the aggression in the move that we've seen over the last little bit might make somebody feel that way. Take a look at the volume here. It started pretty quick, but it's kind of clammed up a little bit. What has me a little bit leery, and this is why I'm okay cooling my boosters and slowly getting myself back into these markets, is I'm starting to see a pattern here. Let me draw that line a little bit better, where we are toying with some pretty significant support. And you could see back here at the beginning of June that we actually did have a nice little high base going on. I'm keeping this chart zoomed out for that reason. Gapped up, exceeded it, stayed into a high base and exceeded that high base. Very powerful, very strong. I believe we were +3, +2 this whole time. Now, the way that this moves is we had a lot of gaps to the downside. However, the overall trend, I'm coming all the way back here to the end of April, and I'm going to draw this, is still up. In fact, let me get rid of some of these and have you focus a little bit more on, it's at the 50, but the 50 is below the 20. It has flattened out, so it's showing a little bit of a, hesitation. I might consolidate or pull back, and it is giving us a little bit of a bearish signal. Now, when we move over into the Qs, you're going to see this is a lot more ominous, and it's just that juicy profit taking. Say it again, folks. I've been talking about at some point this AI craze, this search to the upside. People are going to hit the cash register. This isn't a panic. This isn't weakness. This isn't the failure of AI. This isn't the failure of NVIDIA and these companies. It's literally just I'm cashing out. That's what this is so far. You'll know the difference between a bearish market and just an aggressive corrective action. This is where we're at. Now, could things get worse? Yes, but understand the economy needs to get worse. So as long as we're aware of that, then we can just go back to the technical analysis of all this. And I found this level here at about 449 here on the Qs. It's a level of resistance that we saw going into March and into April. I'm going to show you how relevant April's move to the downside is and comparatively to what we're seeing currently using the VIX chart. So it did break out and it had this big surge. Understand that this surge right here was a lot more aggressive than the SPY. So the recovery, if you believe in the rubber band theory, should subsequently equal that. And it did. It has. Now, this does still look bearish. In fact, if I'm addressing this for the first time, this is something that I do not want to be buying into, but it is definitely not collapsing. It's just being taxed. It's being taxed aggressively. Or what I mean by taxed, folks, is people are just taking profits out of it. I'm not going to look into it any further than that because then I'm speculating. Let's take a look at the heat map and see where that went. And it's basically what you'd expect. Apple hung in there a little bit. Like I said, Microsoft only down 0.89%, beat its numbers. A little light in their AI projections, and it is down 5.5%, almost 6% at one point. I'm not sure where it's at now. So that's definitely red. But look at NVIDIA here. Dropped some more. AVGO. Some of these larger companies are just giving stuff back. Tesla's down again. And this is great. But if you take a look at this other side, I like to draw this diagonal line across the financials. Looking over here, you're seeing a whole lot of green. Energy, real estate, industrials, healthcare, good stuff. And some of the financials are still hanging in there really well. The great rotation continues. Now let's go ahead and show my fun slide here because here's the different illustration of it. The first thing I want you guys to focus on is this move in April. This is the VIX. I'm sorry, folks. I threw this together pretty quick so you can squint down. But the peak here is just under about 19, 18 and a half. We close again here about 17. So just focus on this box and this move to the upside. We hadn't seen anything like that before since the beginning of April. Now you can measure the two together when it comes to the charts, the SPY chart, and we almost have the exact pattern. The difference is this is the second surge to the upside is more of a profit taking than it is of being skittish or worried or scared. So I would expect the VIX to kind of stay where it is and maybe mill itself out unless we run into some real trouble. This next chart over to the right is the weekly performance. So look at this. It is leaps and bounds. 6.33% down 4%, sorry, I drew a line through that, but 2%, nowhere near. The majority of all selling in this week is heavily in consumer, communications, and technology, the leaders. And then the last one, this is a heat map of a week. This is a 1 week heat map. NVIDIA down 15.38%, Microsoft down 4.93%, Microsoft's down another 5.5% today. So that's probably a lot of that. Apple's down 2.3. You can read it. So yeah, it is very specific. It's very selective. I like how Rob referred to it as the great rotation. I just thought here's 3 charts that could really kind of solidify what we're seeing and what's going on in the markets. So how do I feel about it? Well, this was difficult for me. The weekly outlook, folks, I'll say it again. I came back from vacation, so I'm going to say it's a 0. Why is it a 0? Okay. Because of this. It is sitting right on its 50-day moving average going into an FOMC statement. I loved Corey's breakdown of the markets yesterday, saying that he would not be all surprised if we got a little bit of a subsequent blip up before we moved back down or even consolidated. That is still a possibility. As of today's candle, boy, it looked like it really wanted to fall apart, but we did get a nice little rally into the end of the day, but it's still closed below the 50. So I'm on the 50-day or slightly below it, so it's red. Below the 20, absolutely, and it's flattening. That 20 is flattening. So I am at 1.5. I would like to be at a 2. I really would like to be at a 2 for the monthly outlook. However, their FOMC statement can change things. Now, it's not going to change it immediately. Understand, I don't want you folks to react to whatever the initial reaction is. I'm waiting for the when Powell addresses. He does his little Fed minutes or whatever, talks, or not in the minutes, but talks about, hey, this is why, this is what we're seeing. you're going to get more of a reaction there, especially if he keeps the rates unchanged. The expected FOMC is to keep them in line at 5.5% and not to reduce or raise, obviously. So I'm going to keep that at a negative 1.5 for the monthly outlook. That is a very bearish chart. I am right at -2. But the 0 is only because the unexpected FOMC move tomorrow. So when I get back in town and back from vacation, I start over. I like to go the top down approach. I start completely over. Come back, I'm fresh. I redo all my watch lists, and I just go straight out. What's the market's doing? What the sector's doing? And I thought it'd be kind of fun to share kind of my outlook. So I came up with the real estate sector, had a really good chart, so I'll be hunting in there. Utilities had a really good chart for sideways, slightly bullish. So I'll be looking for +1s and 0s in there. And then the communication sectors really kind of raised an eyebrow because I think the tech sector is oversold. I think some of those are a little bit oversold, but I see the communications as having a nice rally up to where if it rolls over, I could look for some bears there. And it's that simple. I haven't gone any deeper than that, but as the days go by, I will keep scanning and looking for trades. So let's take a look at where I'm looking bullishly, and this is the real estate sector. I just love the pattern here. What's unfortunate about the real estate sector is it doesn't have very many stocks in it. However, there are other stocks and other sectors that are tied to real estate, not just REITs. There are some pretty good ETFs out there as well. I just love the ascending triangle pattern. Looks like it's moving higher. It could break out. So I'm going to keep my eye on that and anything that's kind of correlated with it. The real estate sector to me just seemed to have a pretty cool chart. What I was really focused on is this shorter term ascending triangle pattern. Understand, folks, where I draw this pivot was where I saw that switch, the flip, seeing all the strongs or the great rotation. I love that phrase. It's fun. And this really participated on the other end of it. The volume's pretty decent, but the ascending triangle is great. It did have a bearish crossover here, but I like how this 20 is starting to approach that 50-day. This would be a good place for me to put something on sideways to up. There is resistance up here. So I'm trying to play something within this channel. If you want to be a little bit more reserved and sit back, you can wait for it to get above that channel and get something more of like a +2, +3 trade. For me, this might be something to park a diagonal spread, some shorter term credit sideways to up. Once again, I just got back, so I'll have to dig through there deeper and see what kind of trades are out. Moving on to the bear side, it's communication services. Yes, the leader, the greatest thing ever. And what I like about it is just this area here. It's reactionary. It did come from why does it feel reactionary? It's because it gapped down. It was quick, big volume. Now it's having this bounce, but what's happening to the volume here? It's getting lower. It's below the 50. 20 is dropping. It's starting to flatten. But if I see any sort of a pivot point that starts to move back down, then yes, I'll be looking for some stocks that have a similar pattern, basically the bear rally in some of the stocks here. Now, that's about it. That's about all I've got, and that's about all I want to do. I'll tell you what's going to happen tomorrow is I'm just not going to make any decisions tomorrow. So stick to your plan is the bullet point number one. Lots of emotion, lots of should I do this? Oh my gosh, I didn't expect that. What's happening here? It's emotionally driven. Stick to your plan. Try not to make any decisions on the FOMC reaction. That is a difficult thing to do, especially if you're waiting for trades to trigger and you want to get ahead of them. So let's say it's a report that the markets didn't like. It starts to fall apart. You find yourself chasing your bear, and you can really pay way too much for it. The volatility increases, and you end up getting into a bad trade. So if you don't have to, I would just not trade. Focus on the sector performance more so than individuals. That will also calm you down. That's why what I had showed you here is just the sectors themselves. The individual stocks will show their face once I look for them. The overall sector, our top-down approach, remember, it's 50, 30, 20. So 30% of it's going to be the sector itself. Markets in rotation mode, so don't confuse profit-taking with weakness. I think that's something I really wrote there for my bears because I've had a lot of my bears sending me emails saying, oh, here it comes. This is it. This is the end. We got it. It's not. It's just a very strong, aggressive rotation from some companies that are super big and super strong. Keep that in mind. They're not going bankrupt. They're just being scalped a little bit. They're heavily overinflated. They got a lot of money, but they're making money and they're doing really well. So don't confuse profit taking for weakness. Rate decision tomorrow, Powell's press conference. If there's no change, if he comes in line 5.5%, says, hey, nothing's going to happen, you'll see a little bit of a hiccup, but it'll be what the press conference, what he says. I saw this, I didn't see this, I'm worried about that, I'm looking at that. That's what people are going to hang on every single word. Now, if he does cut rates, we're going to get a massive move as well. I don't know. It should be to the downside because it's a little bit more ominous, showing that expected weakness. However, I'll just say it again, folks. What I've seen in these economic numbers for the last long time, we are super stable and super strong as an economy. Earnings reports, you got Meta, T-Mobile's down there, Qualcomm, Boeing, Lam Research, so they're still going, so keep an eye on that. It was interesting to see that Meta actually started to slip a little bit based on Microsoft's performance or its reaction, its earnings, but we'll see what happens as they announce tomorrow. All right, let's try not to look too much into it. Instead, let's just take it for what it is. Scratch your chin and go, that's interesting. Oh, that's interesting. Because the markets are going to reveal themselves, especially sentiment. Sentiment's definitely been a little bit more on the bear side, but I think it's a little bit more on the greed side. A little bit of people taking money, worried about what's going to happen with the election that's coming up, worried about what the Fed's going to do. Kind of a little bit of, maybe I should, ease up out of the markets. It's not bearish. It's just kind of defensive. I think that's why we're seeing that rotation into some of those defensive stocks. All right, guys, that's all I got. It's nice being back. We'll talk to you next time. Bye, everybody.